Hello there, and welcome back to Calculating Dates and Timelines without a real estate agent in your self-guided home selling journey. In this episode, we're diving into the world of loan approval and financing timelines for your buyer. Let's break down the steps from mortgage application to final approval so that you understand what's going on behind the scenes. Financing is the backbone of many real estate transactions. Understanding the timeline is crucial for both buyers and sellers, so let's explore the journey. Number one, mortgage application. It all begins with the mortgage application. If your buyer is fully pre-approved, like we talked about in segment 6, this process will have already been started. Your contract should also state a deadline for your buyer to have submitted at least one mortgage application so that you know they're doing their part to get to the closing table. Number two, underwriting process. The underwriting process follows the mortgage application, where the lender thoroughly evaluates the buyer's financial profile. This can take anywhere from 2 to 4 weeks depending on how much was done when the buyer obtained their initial mortgage pre-approval. Number three, appraisal and home inspection. As mentioned in episode 1 of this segment, inspections and appraisals are typically ordered immediately once your contract is signed. Inspections are for the buyer's information, not the lender's typically, and the appraisal is a determining piece in the buyer's overall mortgage pre-approval. Both items typically take close to 2 weeks to complete. Number four, conditional approval. Upon successful underwriting, the buyer receives a conditional approval. Now, this means they must meet certain conditions, such as providing additional documentation or receiving their appraisal report. Conditions can take hours to weeks to satisfy, depending on what they are. The best way to ensure streamlining the financial process is to make sure your buyer is fully pre-approved before accepting their offer in the first place. Common pitfalls include delays in document submission and changes to your buyer's financial situation. Stay proactive and keep in contact with your buyer's lender to avoid surprises. That's the financing timeline in a nutshell. Could be faster with a cash buyer, could take longer depending on your chosen buyer's financing, or if unexpected things pop up. But now you're better equipped for this phase of your real estate journey overall. If you like this episode, don't forget to like, subscribe, and share with someone else who might find this insightful. Our exploration of calculating real estate dates and timelines continues in episode 4, where we'll unravel the post-closing timeline. Stay with us.